Hi, this is Zak Mir with the Bulletin Board Heroes here at Vox Markets for Wednesday, the 15th of December. Looks like it might be second time lucky for Catenae. We're bouncing off that 0.55, 0.6 area for the second time this month, and sort of a V-shaped bull flag, which is what I call it here. The decline from last week's rally and then back up again had that sort of pattern back in July as well. Obviously, after that, the shares fell back, but still got the possibility of a sustained clearance of the 0.9 pence area, leading to 1.2 pence at the top of that July broadening triangle. And clearly, the hope is that the 0.55 area will remain as support, whatever happens for this stock in the near term. On to Kodal, which I interviewed yesterday. Here we've got a situation where the shares have actually bounced off what was old resistance and then new support there in May, and so the 0.2 pence zone holding. Initial target here maybe up to the 50-day moving average at 0.32. Otherwise, if we can get through that relatively quickly, maybe in the next week or so, then we could be back into the mid-30s or maybe towards the 0.4 area by the end of next month. Moving on to Kromek on what is not exactly a fizzy day for the small cap area, but it looks as though the shares have shifted along. So the floor of that channel from October last year back at basically what was May support, so 12, 13 pence. Above 13 pence, looking for the stock to head up towards the upper teens, maybe 19, 20 pence by the end of next month. Hoping, I suppose, the big picture here is that on a 2 to 3 month time frame, if we hold 13, we could head up to 23, 24 pence early in the new year, but still quite a long way to go on that. On to N4 Pharma, which one would hope with the current revamp in the general biotech area, given the COVID revamp, we'd see something good here. But so far, shares probing for support back at November lows last year around 5 pence. While we're above that, and with that having taken the shares to a very oversold level, there's a chance of a dead cat bounce back towards the 7 or 7.5 pence area over the next month or so. But the key here for N4 Pharma is that we hold yesterday's low and the November support, which maybe we can. Onto a stock which already had its rug pull a month or two ago. We had a rather horrific decline there for Polarean, and since then shares, I suppose, reverting to the initial 2021 support area, so in the mid to upper 50s. A decent move today through the 50-day moving average at 58 pence, and while we're above that, the chance of retesting that post-crash peak for the stock at 77. So above 58, up to 77 possible on Polarean. Moving on to a stock which should also be going great guns in the current environment. Here we've got Poolbeg Pharma. The interesting point here is that we had that low there back in August at 8.4 pence. Just narrowly went through it, so down to the 8.25 area. Bit of bullish divergence there as well, so that does suggest that having delivered a bear trap to a temporary new low, shares of Poolbeg could be back on the front foot, if that makes any sense. With a line of resistance here around 9.5 pence. End of day or weekly close above 9.5 pence could get the shares back up towards the upper ends of the range, 10.5 to 11 pence initially, and then up to the post-September peak at 13. So just a decent combination there of a bear trap and bullish divergence for Poolbeg at the moment. On to a stock which has actually fallen back to where it was this time last year, which is interesting given all that's happened in the meantime. So just in December last year, we're around sort of the 4 pence area, 4 3/4 at the moment, and near the NAV price. Also, you can see the shares in deeply oversold territory, so down at 17 on the RSI front. Each time the shares have been down to the sub 20 area. In the recent past, we've seen decent rallies for the stock. So obviously that was in March 2020 when we had the big rebound from below 2 pence or near 1 pence. Then we had the same thing in November last year when the shares were near 3p, and obviously after that they quadrupled from that level. Nice little rally back in August from 6 to 8.5, and hoping with the same thing, especially this line of support from back in April last year holds around 4.7p. If we can do that, then the initial target here back up towards the 7p area, which is October, November resistance. Moving along to a different sector, Shanta. Here you can see that shares have also had a rather torrid time of late. Could be a situation where with the shares so oversold here around the 8.5p area, which was basically April 2020 support, we've got a bottom fishing opportunity. Initial target here, we hold above the 8 to 8.5 area, back up to fill that gap between 10.5 to 11p over the near term, maybe the next 2 to 4 weeks. On to Sound Energy, where the situation is rather more bright. We were looking for the V-shaped bull flag to give us a new leg to the upside, and not too far away now from the 3p area at the top of that April broadening triangle. So things shaping up quite well for Sound. In fact, at this stage, 3p looks like it could be the minimum. We've got both the 200 and the 50-day moving averages rising. The run up to a golden cross, which is what we will probably get in the next 2 to 4 weeks, is traditionally the strongest part of the cycle. So it wouldn't be surprising if Sound managed to beat 3p by quite a margin, possibly going even up to that resistance line there from July last year, as high as 4.5p on a 1 to 2 month time frame. On to a stock which has delivered a decent recovery in the last few days. We've had a bit of jiggery-pokery. We went down to fill that gap there at 24, but the rebound from there has been astonishing, and initial target here up to 44p, above 38p, basically we're looking to the upside. Best case scenario target here, the line I'm about to draw at the moment, which would take the shares up towards the 55p area. It's above 38, looking for 55, especially after the bear trap situation below the 50-day moving average that we had earlier in the week, in fact on Monday. So that was a handbrake turn, and that should give us a pretty good push to the upside over coming days while we're above 38p. Finishing off with another stock which is back where it was at the start of the year, Tirupati Graphite. Here we're still looking to the bullish divergence that we had after that bear trap, narrow bear trap, a bit like Poolbeg, temporary bear trap, to new lows and then back up again. The view at this stage is that while we're above 67p, the old November support, the target here is initially to retest 83p, which was last week's resistance, and then on to £1 maybe by the end of next month. That's it for me today. More updates tomorrow.